Harry Dent is a Harvard-educated economist who specialises in market cycles. Now, what many people assume is that Harry Dent is just a doom and gloom guy that only ever talks about crashes. However, this has only been the case for the last few years. But yes, for the last few years, he's been warning of a stock market crash to rival 1929, making it one of the biggest ones in history. Now, Harry has just given his final warning to get out of all risk assets, as he says we're about to enter the next big leg down. And so in this video, we'll take a look at what is he looking at in the charts and also where he thinks investors need to be to weather the storm and even make money from this major crash. As always, if you do enjoy anything in the video, then drop a like and a big thank you to everyone who does. Okay, first up, Harry explains why this is his final warning.
Again, what have we seen here? That first 34% crash, okay? And then a good rally, okay, perfectly. That's the two wave off the one wave crash. And it didn't go anywhere new highs. Another good sign. Then we see another wave down, two new lows. A great sign. That's the beginning, should be the beginning of the larger and probably most forceful third wave. This is the one that's going to hit people the hardest. And by the time people wake up a few months from now and say, oh, I should have sold, it will be too late. This wave should take us down 55, 60% from the top instead of 34% in the NASDAQ and things like that. So again, this is the final warning here, okay?
And so what exactly is Harry Dent looking at? So here we have QQQ, which is the NASDAQ 100, or essentially the tech stocks. And what we've got here, going back to 2014, is this very long-term trend of the highs and lows. And then this really highlights what happened, this major incident here, which was COVID. This was the COVID crash. The Fed had to step in with the money printers, and we had a couple of years of money growth growing at 24%, leading to this huge boom. And with a bull market, the trend we're looking at is these higher highs, higher lows, higher highs, higher lows as it goes up. And then as the trend breaks, you get these new lows, these new lower highs, lower lows, lower highs, lower lows. And so Harry Dent was referring to this first wave crash. And if we measure just how big this was, so here was the top here, and he's referenced this 35% first leg down here. Then we had this big rally that happened, but obviously this was lower highs. And then we've had this lower leg down, which almost brought us back into this long-term channel, pretty much bounced off. And so yes, right now we're experiencing a nice little run, but he's saying this is the time to get out as the next leg down, we're going down past 50%. And past 50% is pretty much going to take us to around about this level here. And really technically the strongest support levels where it's hitting the majority of these resistance points is this 54% down. So this is what Harry Dent is warning about.
This finally, clearly looks like a top. So now your strategy is selling on bounces if you didn't. And I gave my strongest all-out, two of them, clear sell signals, all-out sell signals for stocks in December, just before the January 4th peak in the S&P and just after the November 22nd peak in the NASDAQ. So we did warn about this, but there's still people I know that have positions, and you still got friends out there that don't have a clue of what's going to happen, family members. So this is the time to get serious, again, about getting out of risk assets to the degree you haven't, getting into those safe haven treasury bonds. It's not going to be gold. Gold has held up as usual reasonably in the early stages of this, but that's what it did into the first half of 2008, and then it crashed almost 50% with everything else and went crying for mommy. So you got to get serious about being extremely defensive now.
And so, according to Harry Dent, now is the time to get out of all risk assets. So that's tech stocks, that's crypto, and even safe haven assets like gold. For Harry, it's US treasuries that are the place to be. And he likes TLT, which is BlackRock's long-term government bonds, which also got hit pretty hard in 2022. So, what do we think? Is the worst of this bear market now over, or is Harry Dent correct? And we're going to see a much bigger crash coming over the coming months. Let me know what you think below. And my stance is that there's always legitimate arguments for both directions, and ultimately no one really knows. So have a plan for both directions. However, if I had to guess, I'd say because of the ever-increasing interest rates, it's more likely than not that we're going to see another big leg down unless the Fed pivots. And for now, just to say, if you did enjoy anything in the video, then drop a like. And a big thank you to everyone who does, and I'll see you in the next video. Bye for now.